Markets are flying around and they are massively volatile at the moment. Conflict in the Middle East, of course, is influencing flows and moves on a daily basis. And there are key inflation numbers out. CPI data comes out on Wednesday and core PCE comes out on Friday. If we do see sticky inflation conditions, this will back up what we're seeing from inflation expectations from the events that we've seen in the Middle East. And it could lead us to really pull back on those rate cut expectations from the Federal Reserve. Hello and welcome to ATFX's US CPI data preview. This video, we're going to have a quick look at what we're expecting from those CPI numbers and a look at how we might expect to see some moves in the euro, dollar yen and gold. As most of you will be fully aware, the market is going gangbusters at the moment. Conflict in the Middle East, of course, is influencing flows and moves on a daily basis. We saw a 47% range in West Texas Intermediate and close to that in Brent as well yesterday. The likelihood is we won't see some massive moves off the back of this US data that we get this week. And we've got CPI data, which we're going to focus on soon. And we've got PCE, the other Fed's favored inflation number at the end of the week. They will both have a bearing on how the Fed is expected to move in the next few months. If we do see an end to the conflict soon, then these factors will come back into trading decisions and they will come back in very fast. So first of all, let's have a quick look at these CPI numbers. Month on month, we're expecting the headline number to show a 0.3% increase, the core number to show a 0.2% increase, and the year-on-year number to show a 2.4% increase. That's in line with the number that we got last time. The risk will come is if we see a deviation of 0.1 or 0.2 or even bigger, either side of that, and that could start to see some moves in the dollar. If we see that 0.4, 0.5, expect the dollar to rise and it will really pull back on those rate cut expectations. We're looking at July still as a possibility, about 50% possibility of a cut coming in July, even greater later than that. June's really been pulled back with the recent movements in what we've seen in the Middle East, and we've heard that from Fed officials as well. Clearly, the year-on-year number as well, down. That is coming back a bit, down to 2.4%, but still not down to the 2% that we're looking for, that the Fed are looking for, and certainly not the core PCE number that the Fed are looking for. But we should still see some moves. So what we'll do now, we'll nip over to have a couple of look at the charts and see where we could be seeing some decent moves in currencies and in gold on this data announcement. So as always, if you haven't, I should remind you, please do subscribe to our channel. Our YouTube channel will keep you updated as much as we possibly can at the moment. So here we've got probably our favorite currency pair for big moves at the moment. We've seen massive moves in dollar yen, and it's been flying around on the back of geopolitical concerns and not in the way you'd normally expect it. And that's why it could be such a good trading opportunity on the back of these dollar updates. Normally, when we've seen some of the recent moves that we've seen in markets, geopolitical concerns tend to move the yen to the top side. You see yen repatriation flows, and that would take dollar yen down. Now, all we've seen since this Middle East conflict is the dollar yen moving up, and it's trading really nicely on this trend line. It's quite a recent one I've drawn in. Basically, interest rate differentials are having a big effect on how dollar yen is moving, and we could see some big moves. So greater than the 0.3 or the 0.2 for the core number on the month could see this move back up to challenge these recent highs. 159.20, 159.30 coming up. Obviously, we've got that annual high there at 159.45. That's going to be the target on the top side if we move it. Obviously, something we also have to take into consideration is potential intervention by the Bank of Japan. That's what took this move massively lower during that January period as well. So potential for huge moves. So I would say the real potential risk move could be if we get a weaker number, we see a break of these support trend lines. It takes us back down maybe to this 155-ish level, further down below that around about 153. It's probably going to be around about 153.50 by the time we hit the data release on Wednesday. So good potential moves. It's setting up really nicely for both sides. As I said, if we do get that stronger number, I'd be aware we could get some intervention, or certainly hitting those intervention levels from the Bank of Japan. It's sitting nicely just under 158 at the moment, but potentially great trading opportunities. I'll take you over to the euro chart now. Also looking good for some moves. Here's the euro daily chart. You'll be familiar with this if you've been tuning into our videos before. A big move down yesterday. We got a low down at 115.05. We're back up around about 116.30-ish at the moment. So massive volatility in the markets. Euro could be nicely set up. We're sitting in the middle of the range. It could see a move back up to that 117.50 level. That's if we get a weaker number, a 0.1 or a 0.2, certainly a 0 or negative. It should see the euro take off. Stronger number could see a revisit of this support trend line. That's coming in around about 115.20, as I said, 115.05, the recent lows. A really strong number could see a break of that level. And then we're looking down to these lows that we saw all the way back in August 2025, just under 114, the figure. Going to move over to gold now. Also massive potential for moves. Now, similar to dollar yen, gold has not been moving in its safe haven aspect that we normally expect from it in these trading conditions. The dollar side of the trade has been dictated, and that gives it an even better trading opportunity on the back of the US data that we get this week, especially the inflation stuff. So stronger number, expect to see a challenge of yesterday's lows, down around 5,000, also had a low around there 3rd of March as well. So big level coming in, trend line now round about 50.30. But a stronger number, expect those levels to be challenged. A break and a firm break of that 5,000 level does open the way all the way back down here to support around 46.50. Weaker numbers, of course, should see gold move to the top side. Resistance now coming in around about 53.58. Previous high up here at 54.18. Breaks of this, of course, will see us challenge back up to that 5,600 level. So excellent opportunities on this US data this week. We cannot ignore the geopolitical concerns that we've got going on at the moment. But if we do see strong numbers one way or the other, they will come into investor thinking. They will come into factors of trading. If we see a calming in the market as the week goes on, expect the impact of these inflation numbers to have a greater and greater effect on how the market moves. Thanks very much for tuning in. As always, if you need anything from us at ATFX, please do let us know. And good luck with your trading. Thank you.